What's up, guys? This is Carter Thomas with Coin Mastery TV TGIF edition. Hope you're all doing great and surviving the bit of a dip we had, so to speak. Kind of serendipitous timing. Yesterday I published that and it was like right as it started. So next time, hopefully we can time it a little better, but that's all you can really do. Today we're talking about, obviously we're going to spend most of our time looking at the Bitcoin and a little bit about Litecoin and levels that they're at. Where are we? Potential buy-in zones, things like that. Talk about the overall market. A couple pieces of news that I thought were interesting, potentially driving this. And then I want to talk about the bigger picture as we go into the weekend, which I think is going to start to play a bigger role in Bitcoin especially, but in crypto in general. Right now, just as a side note, when you look at price action in cryptocurrency, there's three ways to make a decision, right? There's technical analysis, there's fundamental analysis, which is like looking at the actual coins, determining the supply, the team, all the research type of stuff. And then there's macro analysis. In traditional finance, macro is considered a global macro for the most part, where you look at the big picture. How does everything connect to influence potential price? In crypto, macro is really about more of the market sentiment. How are people talking about this on the social networks? What's going on in the exchanges? How does the actual crypto world affect the price and not the greater world? I mean, we get little things here and there. And I think that we are going to start to see a blending of the greater world into crypto, which feeds into a lot of what we've been talking about. But I do think that conversation is not only one that we should start having more often, but I think it's something that you guys should start paying attention to more often as well, as it relates to your long-term vision and investment ideas and theses of what you're doing. So let's talk about what you guys probably care about most, which is this recent dip. So yesterday I'm looking at the 4-hour on Bitcoin. Yesterday, right around 24 hours ago, we had this, you could see this kind of consolidation. We talked about how it had a little bit of an arc shape to it, and I was 70% confident that it was going to go down. It did in a big way. And if you also remember the other week, we talked about Bitcoin volatility and how there was some pent up price action into the market. Now, what I will say, this dip, whatever you want to call it, this is not big enough to justify a big spike in volatility. We need this to go to either 25,000 or down to like 3,000 for it to really ramp volatility again. So this I don't consider as a huge chart issue. I look at this more as a timing with more of a short-term chart issue, not a big kind of fundamental cyclical pattern problem. Meaning that I don't think that this is the beginning of some widespread dump overall. I think that it's more of a clearing of the cobweb, so to speak. So let's break this down for anybody. And if you're listening on the podcast, right now we're just looking at classic Bitfinex. It's the same chart that we've been looking at all week. And you can see that it's already starting to have what is a bullish engulfing candle, which means that this is going to, the green candle on the right here, which is the latest 4-hour candle, is hopefully going to close not only, it's just going to close much higher with much more price action than the candle before. That is a good sign. If that continues to hold, and over here you can see on TradingView there's 3 hours left in that 4-hour candle. So we got a ways to go. That's why 1 p.m. Pacific, 5 p.m. Pacific, and 9 a.m. Pacific are always really good times to be watching the charts, because that's often when price action happens. Those candles close, algorithms happen, people make decisions based off of them. In terms of levels, we obviously crossed through this trend line that we've been looking at on the, in the triangle, so to speak. And there's two ways to look at this, right? So at least this is how I would look at it. This is how I do look at it. The first is looking back at resistance and support zones. And you can do that pretty straightforward, right? If I just look at a trend line, and most recently, where was the last major resistance level? And you could see 8,300, 8,360, give or take. Right here is one. You get a much stronger one right around 81.30. And the reason why it's stronger is because it tested it so many more times, right? You could see how many times these candles went up against that. And it took it, 4, 5, 6, 7 times before it really broke through. As opposed to this 8,300 level, it only took it once, then tried it again twice, and it came back to that previous resistance. So that means that the support will be stronger at that level. So this is the first way to look at it. You kind of analyze where the previous support levels were. That can give you an interesting kind of buy zone, if you will. I often try to make it a bit of an area, because it's very hard to pick a specific price that you buy on. But this is how I would look at it. The next one down would be 7,500, because this is a clear resistance level that had some pretty severe, pretty good power to push it back down before we got back up here. And then obviously where we're at right now, if this holds, it holds. We're good to go. You can see that there is a bit of support in the chart right around this 8,500, which is right where that wick of that candle came down. So that's what I would be looking at. Right now, you just wait and see and make sure that this thing confirms. You really want to watch the volume, right? You know, one of the best signs that you can tell that the price is bottomed out is when the volume spikes. And you can see that the volume, at least on Bitfinex, which is typically a good indicator, did not spike, at least on the 4 hour. If we go into, let's say, the 1 hour and we scroll out, you can see that even now on the 1 hour, this volume is not a huge spike like we may have seen in other parts in the chart. Now, that's not a deal breaker. It just means that it's not 100% convincing that that's the bottom. So those are a few things that you can look at. Now, I'm going to delete this. The other thing that you can look at, I'm also going to remove that volume to make it a little cleaner, is our good friend Fibonacci retracement, which is where you can look at the current, let's call it bull run, and you can see where the levels are. I'm actually going to do it from this particular, where is it? Oh, right there. And so what I did here is, when you look at the chart, and you can, you start it where the most recent bull run begins, and you can do this for the whole year if you want. You can do it short term, but if you do this, it gives you some levels, like how it's going to retrace. And what you see is that the price has gone up, and then you kind of see some natural support and resistance that are built into these Fibonacci levels. And when you really scroll in to, let's call it 30-minute, just to get some kind of closer look, you can see that it broke down through this Fibonacci level, came up, it tested it, and it hasn't been able to confirm on top of it yet. And that level is at the 86.64 price point. So that's an interesting other way to look at these type of patterns, right? When things are really falling down, but you also already know what the peak is, it can give you some general guidelines, which often end up matching up to some of the support and resistance that we've previously seen. So what does this mean from a buying decision? Well, going off of this retracement, I would wait until this confirms on top of this level, right? Let's say it gets into 8,800-ish and stays there for an hour, 2 hours. I don't care if it starts running, it starts running, right? And so it goes. But I am much more concerned that it's here to stay, and it's not just going to run up and then dump again, like a dead cat bounce. And so I would sit and make sure I would see the strength of the support on this level before I did anything else. If that failed, which it's already kind of failed twice, so to speak, I would go down and I would look at the next one, 82.50, and then I would go from there. And I'll keep moving my way down until it really started to prove itself out, looking at volume the whole time. So that's what I'm looking at. Again, some people ask me, you know, if you were 70% confidence it was going to drop, like why didn't you just short it yesterday? And the honest reason is that this whole time period, it's like after it kind of got out for the most part, or at least exited a good amount of the position, that my trading position, not my holding stack, back here at whatever 9,800 area. I've been pretty tame. One, because I've been kind of sick, but two, it just hasn't really I haven't really felt like I was on my game from a trading standpoint. And that goes a long way. If you're not feeling the flow about it, for lack of a better term, it's better to do nothing, because I just can't seem to get my head around where we're at. Are we going up? Are we going down? And that's why I didn't short. It's because my head wasn't in it 100%. And I would rather just wait and see what happens in that case. So just for anybody who is wondering, you don't have to trade. I probably trade on 10, maybe 15% of all the analysis I do, which, you know, some people follow suit, some people don't. I think Litecoin's the other interesting one that I'm watching, mostly because if there is a bounce, historically Litecoin has had much better percentage gains. So often it can be good to buy into Litecoin, even with lower liquidity, because you can get a bigger return and then trade that into Bitcoin whenever you're ready, or just hold on to Litecoin if you want. But that's what I'm looking at. Same thing too. You can run a retracement. That's probably going to be the easiest if you're just getting started, where, I mean, anywhere around here. I'm not going to get too specific. And you can start to see at these levels start to work themselves pretty nicely into how that retracement looks. And that can be an easy way to get started and give you some ideas on what looks good, pairing that with the volume. All right, now we go over to market cap. Refresh it. You can see that the overall market cap down to 393 billion. Switched over to BTC, and you can see a bit of the bleeding starting to stop. The one that really stuck out was Augur. The reason why it was listed on Binance last night or this morning or whatever. So I think that's obviously an outlier. Doesn't mean you should go chasing it or anything like that. But when it's red across the board and you see a few that are not red, it's not an indicator that, you know, a sign of strength. So you should go and find out what's going on there. But yeah, I think that there's nothing new here. I think that this is just, it is what it is. I think it is very interesting, and I've not done this analysis, to see how much of a market cap drop that caused when versus the percentage drop in Bitcoin, right? And if anybody's done this analysis, you may have insight, but I think you're going to start to see bigger drops in market cap, even with smaller drops in Bitcoin, which is counterintuitive with the Bitcoin dominance, because I think that the coins that are accounting for this market cap are actually lower quality, are going to get hit harder by any drawdowns because they're lower quality. Like the money will fly out of the lower quality stuff faster and faster over the next 6 months. So it's something to keep in mind, meaning like if you can visualize a volatility index for Bitcoin dominance, which is, I mean, that's kind of a weird visualization to make if your brain doesn't work that way. But it means that Bitcoin dominance may start going up and down faster than it's ever gone before. It's typically been a pretty slow process. You may start to see that moving up and down faster than ever. All right. But I'm not really doing anything on altcoins yet. I'm not convinced one way or another about if this is the bottom or if, you know, alts are where the money is, but I'll definitely let everyone know. Obviously, I've got to say it daily, not professional advice. So make sure you make your own decisions and don't listen to me as any sort of professional decision maker. Why did this happen? One of the reasons why it happens. Well, I think the first reason is that, like, look at this. I mean, the run has been ridiculous. This is a very overheated chart, right? And there just hasn't been enough of a pullback. There hasn't been enough of the there's just been way too much buying activity, not enough selling activity. So that's the bigger reason. Then I always look at stuff like this as kind of you've got this big, like the kindling grows. When you have a chart like this, and Ethereum's another one, which I don't have up, when the chart just keeps going up, and it doesn't have these pullbacks, I always think about it like there's a big pile of kindling and wood getting bigger and bigger and bigger. And it's just sitting there, and then you're just kind of waiting for something to throw a match on top of it. And that's where it gets a flash fire very quickly, like we just saw. And what this was Upbit, which is a South Korean, I think it's the biggest, Korea's biggest crypto exchange. They were raided over suspected fraud. Now, this is not new. Korean exchanges have been raided before, but that's actually part of the regulatory process. That's not uncommon, as we learned last time this happened. However, this time it was based on potential fraud because there's allegations that they were selling people Bitcoin, crypto that they didn't have. So they're basically creating fake coins and selling it and saying it was legit. And we'll find out the details of all this. What is interesting, though, is that sounds very, very similar to our friend Tether. So I have no idea if any of this is connected to anything else, but I do think that it's very interesting when you start to look at the impact of regulation and what it means. Like, how do I say this? Like, don't trust, verify, right? I mean, we all know that in crypto. You never just blindly trust anybody. You always verify everything that you can. And I think exchanges are one of the things that have gone not on the radar by any means, because many exchanges have been garbage, but we haven't really had a major discussion about bad actors, especially with the big players. Imagine, the Binances and the Bitfinexes, and Bitfinex has gotten a lot of heat, I should say that. Bittrex, Coinbase, and Gemini, and Upbit, and OKX, and Huobi. If it's kind of like, hey, if it works, if it makes money, if it's got liquidity, don't ask questions. And that's what the CFTC is really trying to do, at least in the United States, which will have implications around the world. Japan's obviously trying to do this. China's trying to do this. That is the thing, right? When I think about what is the black swan of crypto, what is the thing that could really hurt or explode crypto, in my opinion, it always comes back to the exchanges. That's everything, because it provides liquidity. And decentralized exchanges, in theory, could solve that, but I'm telling you, it won't, at least not anytime soon. The same reason the average person, if you handed them a hardware wallet and said, hey, you're your own bank now, the average person would not be able to handle that. Decentralized exchanges, same thing. Other piece of news that was interesting, and I'm on the fence about this actually, but I do think it's relevant for you guys, is NVIDIA came out with their quarterly earnings, and they showed a very large drop in crypto mining interest and purchases, right? So if you don't know, they sell GPU processors, which are typically used for high-intense gaming, but people have been using that to mine crypto, like Bitcoin, Ethereum, whatever. But they're seeing a big drop in demand. In fact, they're forecasting there's going to be a 2/3 drop in the price because of their drop in sales. Now, as I mentioned yesterday, I do not know enough about mining to speak on this as an authority, but I will link to this, and I would encourage you to dig into this and come to your own conclusions about it. But what I will say is that mining is becoming a very different beast than it used to be, right? Obviously, Bitcoin is the biggest one, and Bitcoin Cash to a certain extent, where those are still require mining. But Ethereum is moving, right? They just released Casper. They're moving over to a proof of work or a hybrid system, or proof of stake system, I should say. Many of the other top coins are moving into either proof of stake or delegated proof of stake, like EOS and coins like that. The other piece of this is that there are lots of new mining companies coming out. Mining itself is a very different world and business than it was even 6 months ago. So while NVIDIA may see a drop in GPU processing power, the implications on mining aren't that black and white. It's not as one-to-one, because the technology and the way mining is done with ASICs and all the new types of miners that are coming out actually may be able to make up for what NVIDIA is feeling the heat on, right? And then you got Samsung coming in. They're going to get into the mining business. So there's a lot of moving parts of this. So when you see something like this, you see a headline like this, NVIDIA needs a story to not only tell their investors and their shareholders, but this is just a great story to write about. However, if you do a really large scale look at how the mining world is evolving, I think that you will find that the story is not nearly as dire as they make it out to be. NVIDIA is just being eclipsed by superior technology and by the ecosystem changing. That's my personal take on it. So I wouldn't put a whole lot of stock into this, no pun intended, but I do think it's important to have a pulse on how would this impact the mining world. Good way to do that, look through the top 20 coins and ask yourself, do I know how these coins are being minted, right? Is it a fixed supply? Is it an infinite supply? How many are issued? Are they mined? Is it proof of stake? How is it done? And that can help you make better decisions when you see pieces of news like this. It does make a difference, and it can help you in your journey as an investor. Last thing I'll talk about is some of these bigger macro issues. A long time ago, this must have been last fall, maybe even last winter. We were talking about how when you look back at the global financial crisis of 2008, 2009, there were a lot. There were tells that came out before the global financial crisis actually happened, right? Countries like, I believe it was Iceland was one. Maybe it was Greece or Italy, but there were countries around the world where certain things were starting to show signs that they were like cracks in the system, but they were small enough or they weren't big enough deals. Everyone's like, oh, well, whatever. It's a one-off thing, but the big developed countries, some of the big European countries or the United States or Australia or whatever, we don't need to worry about that because these countries are too small and they can't handle it. Obviously, that was a terrible thesis. I would encourage everybody to start paying attention to what's going on in emerging markets, specifically with their currencies and how the central bank relates to their currencies and their interest rates. And if you don't know how this stuff works, again, Google Ray Dalio, how the economic machine works. It will give you a good understanding of how debt and credit works. But what we're seeing right now is Argentina is falling into a huge crazy, they jacked their interest rates up to 40%. The central bank needs to step in. They're going to have the IMF, the International Monetary Fund, is going to have to come in and bail them out probably. They're doing insane bond, people are trying to buy these 100-year bonds that are just like crazy. The whole thing is just a mess. And we saw this happen in Venezuela, right? We're seeing this happen in Argentina. We're seeing this happen in some of the countries over in the Middle East. In Turkey, it just happened with their, last week and into Monday, their currency being massively devalued. But you're starting to see the dominoes start to go. And when you look at what would be the global financial crisis of the next one, or what we would experience, it will be based on central banks and how money supplies and interest rates are being really manipulated, right? Now, the reason this matters, one, is because it's just good to know about as an investor. And if you're overexposed in any particular sector, you can potentially reallocate. But secondly, the last time this happened was in the late 70s, mid to late 70s. And there was a kind of a widespread banking and currency crisis. And the world was a very different place back then, obviously, and the way the countries are made up. But what happened is that there was a mass flight to stable and quote unquote safe asset classes, specifically gold. And if you go and look at the gold curve back in the 70s and into the early 80s, it was crazy. It was like, parabolic, completely nuts. And then that early 80s kicked off. And then, like we talked about yesterday, all these new financial products came out, and that spawned a whole new world of debt and of seeming wealth. But the currency crisis caused people to go into what are considered safe assets. What's going to be really interesting is how this sort of activity, where the money flows, right? Maybe it goes to gold again. I mean, it's going to go to gold on some level. I think that's a no-brainer. But what else is there? And I think Bitcoin is in a really unique position where it's really volatile, but it's censorship resistance, because it doesn't, the government can't like control it. They can't seize it. I mean, I famous last words, right? But Bitcoin has a very, very unique selling proposition for somebody who is living in a country where their currency is becoming massively devalued, where the government is manipulating that currency devaluation, and they need a way to store wealth. They need a bank account that's not going to, that won't just disappear. And Bitcoin is really, really attractive in that sense. So that's why I think this sort of thing is super interesting to watch, right? And start to pay attention to not only what happens like with Argentinian pesos, start digging in to the Argentinian metrics. How much Bitcoin is being purchased in Argentina? What do people in Argentina, how are they responding? What is their sentiment around Bitcoin? How can they even get their hands on Bitcoin, right? And it's really unique in emerging markets because a lot of them don't have exchanges. They can't just fire up their computer because they don't have computers. Like most of them have cell phones. How do they even get it? This, in my opinion, also brings a super interesting argument for Bitcoin Cash. And look, I'm not here to promote Bitcoin Cash by any means, but this is going to drive a lot of people to something. And, we'll see what happens. But you got to start paying attention to this. I'm telling you, this is going to be a big, big, big deal. Because we're talking about like institutional money and index funds and stuff like that. That's cool, but that just makes bankers rich. Okay, the bankers are not just going to give up their money and power. This, however, will drive the price of Bitcoin and Bitcoin Cash or Monero or whatever they're buying. This stuff will drive the price up because then you got 200, 300, 400, 500 million people buying it, actually owning it. And that's the big difference. So it's terrible. It's tragic. But this is how the world works, unfortunately, as it works now. And you gotta just play the chess game as it comes. So with that, I'm going to sign off. Next week, guys, I'm gonna be in New York all week. So I'm gonna try to get a video out, but I honestly can't promise. If anything, I will try to send out some emails. So make sure you sign up for the email newsletter list, coinmaster.com/invest. Join on there. You'll get the emails, and on Twitter, obviously, Twitter at Carter Thomas. And with that, I hope you guys have a great weekend. Rock and roll. Make sure you have beer. Enjoy yourselves. This is life. Let's do it. And I will catch you guys later. All right. Peace out.